The company I chose to research is HP Inc. The reason I chose them was for a couple reasons. First, my dad's worked for them for over 30 years, so I was interested to delve into their financial statements and how they compare to the industry. And then, also as a consumer, I've owned printers and HP laptops, and they've generally seemed to be pretty durable, reliable, worked pretty well. So I was interested in looking into their company more. So HP Inc. is a computer hardware company based out of Palo Alto, California. According to them, they're a leading global provider of products, technologies, software, solutions, and services to individual consumers, small and medium-sized businesses, and large enterprises. So HP Inc. actually originated as Hewlett-Packard Company. However, during my research, I found out that on November 1st, 2015, Hewlett-Packard was actually separated into two companies, HP Inc. and Hewlett-Packard Enterprises. Hewlett-Packard Enterprise was given the technology infrastructure, software, services, and financial businesses portion of the original company. Whereas HP Inc. on their 10-K states they have three segments for financial reporting purposes. First, they have their personal systems. This is personal computers for both consumer and commercial use, as well as tablets, displays, and other related items for both their consumer and commercial markets. Their second segment is printing, which is all things related to printers and scanning devices for both their commercial and consumer markets. Their final segment is corporate investments, which includes HP Labs, which is in charge of their research and development. HP Inc. is part of a highly competitive market, and some of their competitors in their personal system segment include Lenovo, Dell, Apple, Toshiba, and Samsung. And in their printing segment includes Canon, Lexmark, Xerox, and Brothers Industries. Because they're in such a highly competitive market, research and development is a key aspect of HP Inc. They have to continually design new products and services and improve current products so that they can remain competitive. Some of their recent developments and innovation include 3D printing and virtual reality. And in fact, they created their first 3D printer for consumers in 2016. Some of the challenges facing HP Inc. right now are, as I mentioned, their highly competitive market. They have a constantly changing industry, and then, of course, their recent separation from Hewlett-Packard Enterprises and how that will affect them going forward. So if we take a look at their stock, we can see in general there's been a decreasing trend, though they've had some ups and downs. A couple events to note would be in 2012, HP reported a net loss in the third quarter due to a large write-off and restructuring. Also, around that time, the PC business was really struggling, and due to them being less in demand because of the emergence of smartphones and tablets. And then, of course, we see in 2015 there was about 50% decline due, of course, simply to their separation from HP or Hewlett-Packard Enterprises. So when looking to see whether we should invest in a company, it's important to take a look at their financial statements. So some of the highlights from HP's financial statement would be that revenue has slowly declined over the years, and in the past 3 years it's decreased 15%. And similarly, cost of goods sold has decreased by 14%. And this led to an overall gross profit decrease from 2014 to 2016 of 20%. Another highlight from the income statement is that net income has decreased 45% since 2014. But the reality is it's likely not quite that high because of the effects that some things have from their separation. Now, if the income statement, they had a good comparison because the numbers were adjusted for 2014 and 2015 to only include the portion of the company that was HP Inc. But on the balance sheet, the problem is that they still included the whole Hewlett-Packard company, so the trend analysis is a little difficult to look at. However, we can still look at the common size statement. And when we look at that, we see that their assets are mostly financed with liabilities. And this is consistent over the 3 years. In 2016, current liabilities are 65% of total assets, and non-current liabilities are 49%. This is partially due to them taking on more liabilities than Hewlett-Packard Enterprises. However, we see the same kind of thing in 2014 and 2015 to a lesser degree. Their current liabilities being around 40% for both years, and non-current liabilities being around 30% for both years. So we're still seeing almost 3/4 of their assets are being financed with liabilities rather than equity. With the statement of cash flows, again, it's difficult to look at because of their separation. They had a huge outflow in financing, but this was due to the transfer of cash and cash equivalents paid to HP Enterprises. And then we did see, however, before they separated, there was a 47% decrease in cash from operating activities from 2014 to 2015. However, all 3 years, their largest cash inflow was from operations, which is a sign of financial strength. The other area that's important to look at would be the financial ratios. We see in profitability they're weaker in industry norms in most areas. Again, because some of these numbers come from the balance sheet and the statement of cash flows, it's a little difficult to compare from year to year. However, the return on sales and gross profit margin both come from the income statement, so those numbers will be accurate. And we can see that they have a decreasing return on sales, which shows their net income has become a smaller portion of their revenue and they're less profitable. And they've become even further below the industry average. If we look at their gross profit margin, again, they are far below the industry average in this area, and they have slightly decreased from 2015 and 2016. When we look at their liquidity and efficiency, they seem to be around average, though again, it's a little difficult to compare from year to year. If we look at the current ratio, we see that they have declined from 2015 to 2016, though. This could be due to them taking on more liabilities than Hewlett-Packard Enterprise, and we do see they're just below the industry average, so they're still around average there. With the debt ratio, we can see that they have always been significantly higher than the industry average. Their 2016 could be slightly inflated because of the separation, but looking at 2015, they are more than double the industry average. And this is easier to see if we look at a graph. You can see with the gross profit margin, again, they're below industry average. And then the debt ratio, they are way above industry average, showing their financial risk in that area. So in summary, would I invest in HP Inc.? Well, the demand for personal computers has been declining because of smartphones and tablets. And this is reflected in their decreasing revenue over the past 3 years. They have a very large debt ratio, which is a cause for concern. It shows the financial risk. They finance mostly with liabilities. We see they have a decrease in their current ratio, which is too hard to tell right now if they are less able to pay off their current liabilities or if they just had taken on more. Overall, the conclusion I came to is that it's just too difficult to tell their profitability after they're split from Hewlett-Packard Enterprise. Are they able to be profitable on their own? I would recommend we need to take a look at fiscal year 2017 financial statements to compare with 2016 before we're able to make an informed decision. So at this time, because of that difficulty and because of the financial risk from their large debt ratio, I would not recommend investing in HP Inc.